Hey everybody, welcome back to the Maverick channel. Now on this channel we like to talk about digital currencies and real world use cases of cryptocurrencies. Sometimes we just like looking at the market, looking at the sentiment, what is going on in the crypto space. Now, this is the crypto market. We've seen in the past couple of weeks there's been a lot of positive news around Bitcoin. Everyone is sort of flocking into Bitcoin. You get all kinds of analysts saying that we're out of the 4-year trend of the Bitcoin bull market or bear market. That 4-year trend, basically Bitcoin goes up, goes down, goes up. We have the 3-year bear market, goes up again. We have another 3-year bear market. Some people are claiming that we've broken out of that trend, but who knows? No one really knows. People are speculating that we are on the cusp of a new sort of bull run from the Bitcoin ecosystem, because Bitcoin has been slowly garnering force and potential as it's going up in this market, sort of attracting a tremendous amount of liquidity, and it's slowly sustaining this upward trend, or sustained slow upward trend. It had started pulling the general market up with it, but now we're seeing a small consolidation within the market, which is pretty interesting. But generally we know there's a tremendously high amount of positive sentiment generating around the Bitcoin ecosystem. So let me just mention the first top 20 cryptocurrencies just for fun. Bitcoin uses proof of work. Ethereum proof of work is looking to move to proof of stake. Still very high gas fees. Tether, centralized stablecoin. Cardano still trying to implement smart contracts. Binance Smart Chain working well, but sacrificing security and decentralization. XRP, the token, I think it's awesome. There's a lot you can do with the XRP ecosystem, but there's still some issues with Ripple, the company which holds the most XRP tokens out there. Solana is, building its NFT and smart contract ecosystem as well. USDC, another ERC20 token based off Ethereum, which is also having some issues right now with the regulations, with the regulators. Polkadot is trying to basically build blockchain interoperability with their parachains. Dogecoin is a meme coin that's the most popular meme coin out there. Terra Luna, basically they're the most popular decentralized platform. They're generating decentralized stablecoins, basically focusing on that. We know there's some stablecoins like DAI on the Ethereum network, but Terra is really getting into that market of stablecoins quite well. Uniswap, one of the best or first automated market makers. Binance Smart Chain, the stablecoin for the Binance ecosystem. Wrap Bitcoin, I think this is on Ethereum. I'm not too sure, don't quote me on that. Shiba Inu, second most popular meme coin. Litecoin, a fork of Bitcoin. Avalanche is still doing smart contracts, trying to compete with Ethereum, just like Solana. Chainlink, Oracle's Bitcoin Cash, fork of Bitcoin. Algorand. Very many institutions are very bullish on Algorand, but still playing the same sort of similar, still a layer 1 technology trying to take over Ethereum. Polygon, layer 2 scaling, is a solution for the Ethereum network, but it has its own ecosystem that's brewing and growing. Stellar Lumen, they're both competing with, focusing on the payment ecosystem, just like XRP. We have Filecoin, decentralized file storage. Axie Infinity, NFTs basically, decentralized worlds. Internet Computer trying to take over the internet. Well, I've gone all the way to 25. Guys, I didn't mean to actually do that. Let's go into today's video. So, the first article we want to see today, JP Morgan CEO says Bitcoin BTC is worthless. Guys, who's surprised? Who's surprised? He's a reckless guy. I don't care if Bitcoin crashes to 20,000 tomorrow. Either way, the fundamental technologies of Bitcoin still exist. It's immutable, it's secure, it's transparent, it's open source, it's decentralized. These things are still solid. They still, he placed some arguments, he had some arguments in there that how do you know that the Bitcoin blockchain is actually what it is? How do you know there's only 21 million? Actually, someone posted a comment, they were like, dude, if you open one of these Twitter links, you see someone posted, they were like, dude, these are like the line. So they posted like 5 lines that basically state the supply of Bitcoin, that solidify the supply of Bitcoin, 21 million. But we're used to Jamie Dimon. It's not a Bitcoin bull market without Jamie Dimon saying it's worthless. So we used to be Jamie Dimon saying all these things. JP Morgan CEO Jamie Dimon is not a big Bitcoin fan, and he's made it known over the years. He's not a big Bitcoin fan. He was telling all his employees that I'm going to fire anyone that's dealing anything to do with Bitcoin. But this is the same person that's trying to create the JPM coin. Can you imagine that? You know what? I'm going to leave this one where it is. I don't think this is even worth looking into. These are already very wealthy, very powerful people. They do not understand the reason why we're here, why we're in the cryptocurrency space. So there's no point wasting time on this dude. However, These are very influential people, and I hope they help to influence things in a positive direction for the crypto space, regardless of what they are making us see. We're trying to see what they do and not what they say. So this is another article today. US lawmaker is most concerned about Treasury response to crypto. This, I'm not going to go too deep into this article. Basically, it talks about the conflict between the Federal Reserve, the comparison between the Federal Reserve and the Securities Exchange in the United States, and how the Treasury itself could be more dangerous to the crypto space than the SEC. But we know these are both forces that are trying to be immovable forces, but they're meeting, and actually immovable objects that are meeting an immovable force, which is the cryptocurrency ecosystem. So exactly 3% of the United States Senate attended the Texas Blockchain Summit on Friday, all addressing their fellow lawmakers' understanding of the crypto and blockchain space. So we have Wyoming Senator Cynthia Lumin said the Treasury Department may be more of a threat to innovation in blockchain and cryptocurrencies in the United States than the Securities Exchange Commission or the Commodities Future Trading Commission. So speaking at the Texas Blockchain Summit in August on Friday, Loomis said her recent concerns with the federal agency came from the language concerning the brokers of cryptocurrencies in the infrastructure bill currently at the center of the debate in Congress. Treasury Secretary Janet Yellen has expressed her support for the legislation and the wording passed by the Senate in August. Brokers would have to report digital asset transactions worth more than $10,000 to the Internal Revenue Service. Of course, we understand there are flaws within this kind of thing, this kind of regulation. First of all, the Bitcoin bull market, Bitcoin has been taken off for the past couple of weeks. Many people are speculating a couple of reasons. First of all, we saw Jerome Powell, who's the chair of the Federal Reserve, and we saw Gary Gensler, who's the chair of the SEC, come out and say, hey guys, we're not planning to ban we're not planning any time in the future of banning cryptocurrencies and Bitcoin especially, or Bitcoin specifically. So there's no plans of actually banning these cryptocurrencies. I think it's the regulation. They're trying to take their taxes from this. That's the main focus. So that created a bullish sentiment in the crypto space. But you can go ahead and read more about this article. It's basically talking about mainly referencing the infrastructure bill, which is misclassifying things like people like brokers, programmers. All these people are supposed to act like they're brokers, miners and all that, which makes it hard to develop this ecosystem. But imagine that. So this is where Cynthia Loomis comes in and says the Treasury Department could be more detrimental to the crypto space. So let's look at this next article. I think you're going to see this a lot out there on YouTube or elsewhere in media, Twitter, whatever. Backed crypto exchange partners with Google for payments. So millions of retailers currently accept Google Pay as a form of payments, potentially giving backed users the ability to pay in crypto at a variety of stores and online markets. Guys, this is very exciting because someone like me, if I'm running a website, I can pay using BitPay or Namecheap. There's other services you can pay for using cryptocurrencies. It just makes life so much easier and the world more connected. So we see these partnerships like these. They're two big institutions, but they're going to bring crypto mainstream and they're going to make people's lives easier, especially people that are unbanked and people that are debanked or need to be debanked. So users who hold debit cards issued by cryptocurrency exchange backed will be able to convert their crypto balances to make fiat payments using Google Pay. In a Friday announcement, Bakkt said it had partnered with Google to allow its users to purchase goods and services using Bitcoin and other cryptocurrencies through the Google Pay wallet and payments system. So in addition, Bakkt plans to build new analytics and geolocation functionality on its platform using Google Cloud's tools. The exchange hopes that the features will expand loyalty redemption options while providing Bakkt partners with valuable consumer behavior patterns. So this partnership is a testament to Bakkt's strong position in the digital asset marketplace to empower consumers to enjoy their digital assets in a real-time, secure, reliable manner, say the Bakkt CEO Gavin Michael. So according to Google, millions of retailers currently accept Google Pay as a form of payment, potentially giving Bakkt users the ability to pay in crypto at supermarkets, pharmacies, restaurants, clothing stores, gas stations, beauty shops, and others. Imagine being able to pay in whatever you want, but all these cryptos can be channeled back into Bitcoin, into Ethereum, into stable coins, into fiat currencies. So it makes it possible. It creates this economy that's interoperable within each other in and of itself. So the Bakkt partnership follows major crypto exchange Coinbase's June announcement that Apple Pay and Google Pay would offer support for its Coinbase card. Gemini has also allowed, those who don't know, Gemini is another exchange by the Winklevoss twins, who are one of the wealthiest OGs in the Bitcoin ecosystem. I think they have something to do with Facebook when it was starting. So Gemini has allowed its users to purchase crypto with Apple Pay and Google Pay since April. So that's the news about the partnership with Bakkt and Google. Pretty impressive stuff. So let's look at this article. Actually, this is not another article. This is a website of Bakkt. Those that want to check it out, you can know more about it. Manage your digital assets with Bakkt's digital wallet. So they have a digital wallet. I guess they're an exchange in some way of some sorts. If you want more details about this, please by all means look at their website. Let's look at this next article. Bitcoin dominates institutional capital flows as investors accumulate Ethereum, Solana, Cardano coin shares. So just like we've been talking about, there's been a lot of news about the Bitcoin ecosystem with things like Taproot that might enable privacy within the Bitcoin transactional layer. And I think on top of the Bitcoin blockchain itself, then also things like we're looking at Lightning Network, which is being used to make microtransactions on the Bitcoin basically microtransactions off chain, but then transactions are recorded, finality is recorded on the main blockchain itself, on the Bitcoin core. So digital asset manager CoinShares says Bitcoin is taking the lion's share of institutional capital as sentiment in the crypto markets remains upbeat. In their weekly report, CoinShares says that the total amount of crypto assets under management, AUM, is only 5% away from setting all-time highs due to recent positive price action. Now, I'm not going to read this full article, but I'm going to show you these pictures here. You can see the flows, the top accumulators or institutions accumulating crypto. Grayscale with assets under management up to 48,406 assets under management. Actually, at first, okay, this is in million US dollars. This is in, yeah, million US dollars. So 48,406. Can this, that would put it at a million US dollars, right? That would be crazy. 48, that would put it, 48,000, that would put it at 48 billion assets under management, if I'm not mistaken, guys. Because 48 million, that's 48,000 million, which is 48 billion. So CoinShares as well, we give 4 billion. So CoinShares, XBT, CoinShares, Physical, then other companies here, Bitwise and so on. And then you can see the assets that are the largest in accumulation and storage. Bitcoin, then Ethereum. We have multi-assets, so you have multi-assets in there. Binance, Solana, Ripple, Cardano, Polkadot, Litecoin, Bitcoin Cash, and then others. But guys, don't just take everything by a grain of salt. Do your own research in this crypto space and find out those gems on your own. Doesn't mean that if an institution is invested, we know that in 2017, institutions forward into Bitcoin at the top, so they lost money. So pay attention to institutions, but also pay attention to your own research, and that's the best way you can put 2 and 2 together and figure out where to exist in this crypto space. So this other article, little known, Altcoin explodes over 360% in just 1 week as Bitcoin continues to move higher. Now, this is one of those things in crypto space that comes out of nowhere, and you're like, you start to think about things in a certain way. So the 211th ranked crypto asset by market capitalization surged more than 360% in price at one point in the past week. The little known Bitcoin Standard Hash Rate Token, so it's BTCST, Bitcoin Standard Hash Rate Token, skyrocketed from a weekly low of $16 to a high of $75. Guys, I think all these signs are pointing towards the fact that we're in a bull market. I really hope we've broken from this 4-year cycle, because if we hit another bear market, that will be like another 3 years of brutality. But because when things go to 16 to 75, but anyways, let's move on. So the crypto asset has since plunged. I'm reading this article because there's something I want you to note. Basically, the utility of this asset and why it's being talked about in the first place. So the crypto asset has since plunged back down to $44.56 at the time of writing, a decrease of more than 40.7% from the high, according to CoinGecko. So BTC, by the way, I've noticed a lot of people reference CoinGecko as opposed to CoinMarketCap. That's interesting. BTCST is a token collateralized by standardized Bitcoin mining power. So the project aims to make a market and increase liquidity for Bitcoin mining, allowing traders and investors to make gains on Bitcoin mining while eliminating the need to purchase expensive Bitcoin mining equipment. So this is, I don't know how to think about this. This is like, okay, we're starting to mine gold, But we know a lot of people made money from actually selling the shovels and the pickaxes and the different instruments or apparatus used in mining gold. But then we also know a lot of people made money off trading off, I don't know, the price movements of the fluctuations in the Bitcoin price, in the gold price movement. And we're seeing basically the narrative of this is that there's different people mining, and on the whims of the hash rates moving around depending on what's going on, depending on whether China bans Bitcoin or not over and over again, you can actually make a profit trading this token that's representing the value of mining in the Bitcoin ecosystem. This could potentially be bullish. So guys, that's in essence. Of course, this is more complex than I've said it, but if you want more details, I guess you can look more into this token. But that's the premise of what they're trying to do. So here, next article. Top engineers working on Facebook's wallet jump ship to Andreessen Horowitz crypto fund. So the engineers will provide technical advice to Andreessen Horowitz portfolio company. Andreessen Horowitz, a leading venture capital firm operating in the crypto sector, it's actually known as also A16Z, has enabled two of the leading engineers working on Facebook's digital currency, has nabbed two of the leading engineers working on Facebook's digital currency project for its digital asset fund. So according to an October 11th report from CNBC, Nassim Edquayak and Riaz Faizalaboy, I'm just going to call them Ed and Faiz at this point. So Ed and Faiz have jumped ship from Facebook to A16Z, which is Andreessen Horowitz, after spending 2 years working on the social media giant's Novi digital wallet, formerly known as Calibra. So Faiz will serve as CTO, while Ed will take on the role of CIO at A16Z, or Andreessen Horowitz crypto division. Faiz stated, Andreessen Horowitz has shown an impressive dedication to advancing the entire crypto ecosystem over the past decades, and we jumped at the chance to join their premier team and provide technical support to their rapidly expanding portfolios. So that's the news. Andreessen Horowitz has acquired a bunch of smart people to work for them, nabbed them from Facebook. Good for them. Hope it works out for them. And in our last news of the day, guys, nearly 45% of consumers around the world will use crypto for payments by 2023. Gamers, people that are unbanked, debanked, people in remote areas are already seeing people selling NFTs, art. People's lives have already been changed. People that are from all walks of life, they've already changed their lives by participating in this crypto space in all kinds of ways. Whether participating in launches, whether participating whether being airdropped some valuable art or some valuable tokens, or being patient and paying attention to this crypto space, it has empowered a lot of people that would never achieve things that they've achieved now, that would never have achieved them, or that would have had to wait for a good 50 years to acquire the things they've acquired today. Regardless of whether we're going to a bear market next or not, having a long-term vision in this space is very important. So 2023, of course, guys, of course, we're going to have an increased amount of cryptocurrencies being used as the incentives increase, as the general adoption increases. So a new study conducted by an information technology company indicates that crypto payments method adoption is primed to skyrocket in the next 2 years. We're already having countries adopting Bitcoin and cryptocurrencies. The Capgemini Research Institute surveyed customers and industry stakeholders around the world to provide an analysis of the world's current payments landscape. The think tank also combed through statistics from the Bank of International Settlements, the European Central Bank, the International Monetary Fund, the World Bank, and other central banks. So Capgemini notes that less than 10% of consumers around the world currently use cryptocurrencies for payments. However, the Research Institute predicts that nearly 45% of customers will use the emerging payments method within the next 1 to 2 years. Of course, exponential growth due to the growing need of cross-border payments, in addition to concerns about high transaction fees. So Capgemini also says crypto credit cards are also leading the way in terms of adoption. We've already seen an example of Bakkt pairing with Google, Coinbase, and the Gemini exchange as well. So the study, however, still thinks that the outlook of cryptocurrency market volatility indicates a lack of maturity. Still, crypto-linked cards are taking the lead in the crypto payment space, fueled by global card payments initiatives to create a fertile crypto payments ecosystem. The study, however, still thinks the outlook of cryptocurrencies and stablecoins is hazy, citing the mixed reactions to crypto assets by governments around the world. Gemini says Russia, India, and United Arab Emirates see potential in the adoption and regulation of crypto assets and stablecoins. Meanwhile, the study notes that countries such as China and Egypt, I actually didn't know about Egypt or had forgotten, have moved to ban crypto assets due to the rising risk of illicit transactions. One thing that we can take away from all this is that the adoption of cryptocurrency is increasing. As more and more influential people buy up more crypto, their decisions around the crypto space also change because they have skin in the game. They've invested in these ecosystems, and that's one of the reasons why cryptocurrencies will never die, apart from things like immutability. But the fact that the people, the lawmakers, once they get their hands on Bitcoin, once their kids start participating in this stuff, once their friends start participating in this stuff, it's hard for them to draw laws against these ecosystems because they can gain as well. They can participate. These are open ecosystems. They're open to every single person that's born into this world that has the fundamental necessities, the things that are becoming necessities to life. Internet. If you have an internet connection and some food to sustain yourself as using that internet connection. Anyways, that's the news for today, guys. This is a crypto space is still moving forward in a positive direction regardless of what the prices show you. Look at the sentiment, look at what they do and not what they say. All right, guys, take care. Hope you learned something. I'll see you on the next one. Bye-bye.